Welcome to the tokenmarket.net blockchain and token overview. Tokenmarket.net has a complete list of digital assets, ICO calendar of upcoming sales, and we also provide professional services for crowd sales and ICOs. So if you haven't checked out our website, please visit tokenmarket.net. So the first thing we're going to talk about is consensus. Now, many app coins or tokens are actually built inside of a blockchain. However, blockchains kind of fit into a few different consensus models. The first and most prevalent is proof of work. So proof of work is often called mining. So the computational power of that entity is exchanged for rewards. And because the rewards are of a certain value, there are many participants. This decentralizes the networks. And in a healthy coin means that they can still come to a consensus on the update without having to trust one single entity. Proof of stake, which is often associated with faster transactions, means that participants stake a certain amount of coins. So let's say you have to stake 1,000 coins, and now you can participate in the process of updating the blockchain just by proving that you have a vested interest in that coin. Delegated proof of stake is a little bit different. So it's proof of stake in the sense that the participants have to stake a certain amount of coins, but they are delegates. So people in the network vote for certain entities, and they become the people that are able to confirm new blocks or updates. Federated is sort of a closed model. It's often associated with, say, banks or entities that have proprietary information and they need to use a specific in-house blockchain. Federated just creates a few servers or entities around the network that are pre-delegated to make decisions. There really is a very limited amount of decentralization, and generally the participants can change the rules very easily. There's many other types. There's something called Byzantine fault tolerance. There's quorum slicing, and there's what's called DAG in IOTA. But those are quite new and not used as often. So I'm not going to go in detail through those. So how do these networks update? Well, generally, they're developer-led. So the developers of the coin are able to create an update and work with their consensus entities and update the network. In the case of a federated network, it's really simple because basically all the servers are either owned by one entity or owned by only a few participants. Now, once it's developer-led, it becomes a consensus process. So a certain majority of the miners or stakeholders have to come to agreement and initiate the change. And there's two major types of changes. There's what's called a soft fork, which is backwards compatible. So if I were to soft fork, say, Bitcoin, the older clients can still use it, but they don't have the ability to use some of the new features. A hard fork basically means that you're completely changing some consensus critical code, meaning everyone needs to download the new software, new wallet, in order to participate in the network. Basically, the old blockchain is not compatible with the new blockchain. Now, there's a number of monetization models of decentralized networks and app tokens. The most common is mining. So basically, miners compete for rewards and they receive, say, Bitcoin or another coin, and that drives them to compete to get the rewards. There's staking, so those folks that are in proof of stake that have enough in their wallet or they're delegated will receive rewards because they are providing the functionality of updating blocks. There's fees. So, for instance, in Bitcoin, attached to transactions are fees. These fees go to the miners. This can also be added into an app coin. For instance, OmniLayer, which is a form of colored coins, functions on the Bitcoin blockchain, and a certain amount of the transaction is sent as a fee back to Omni. There's peg value, so things like Tether, they are pegged to the dollar. There's a fee in order to get it, and the way that they create value for the coin is the fact that it's pegged to a certain value. Now, fiat currencies, are not as volatile as other things. People have tried to peg tokens to gold, so something that's more volatile is going to have a more shift. There's speculative, so on the market, people will trade. People that have a lot of coins can make profit, and the value is really determined by what people think it can be used for or traditional market factors. There's what are called software access tokens. So these are traditionally app coins. For instance, in the case of Factom, you have to have factoids, which is their native currency, in order to access their software functionality. So this creates demand and allows them to use the factoid to continue to support their business model. In the future, we may see more of dividends and equity. So in dividends, maybe you have a mining coin or contract, and it could be decentralized. And as mining happens, you receive a small share of the income. Equity, for instance, like the Bitfinex token, which was not really decentralized, gives you some ownership of the company's future and allows you to share in the success of the company. Now, dividends and equity have been traditionally difficult. Token market is actually working very hard to make this possible and fit it within the legal framework. However, it hasn't become fully prevalent. So sectors of types of coins, app coins, and things like that. There are payments. Bitcoin is traditionally for payments. It has a store of value and it is held by a lot of people, but it can be used for payments or trading, which allow it to be transferred into a fiat currency or buy a specific product. Privacy is another sector. So you have Zcash, which is a coin that banks itself on the ability to be private in your transactions, so nobody can see what you're doing. Now, the value is still speculative and based on demand, but they've created a sector with a number of coins that are more private than what Bitcoin offers currently. Storage, for instance, you might want to monetize your hard drive. There's a company called Storage that allows you to do that. So you can take the space on your hard drive and you can monetize that. And as people use the space, you receive rewards. Resources can be computational resources, can be other resources besides storage that people will pay in the network. For instance, the project Golem is working on. They can submit tasks, and a decentralized computing hub or swarm can process the tasks and return results. Data manipulation, for instance, with Factom, manipulation might sound a little bit different than what you think. What Factom does is you submit a document, and it converts it into a hash. It's a provable hash, so anyone can go back and say, well, is this document equal to what it was? So it essentially takes the data and manipulates it into something that can be useful as a proof of its existence. Smart contracts. So a lot of entities, Ethereum, Lisk, have come up and they've created the sector of, we are a smart contract platform, and on top of it you can build things. You can add coins, you can build various decentralized entities. And so their sector is really the coin itself allows people to create smart contracts. Gaming has been a very popular one. So whether it's casino type gaming or competitive gaming online, the games in general are very compatible with cryptocurrency. So gaming is one sector that I've seen. Social is becoming a big one. There's projects like Akasha, Steam, Yours Network. So basically tying cryptocurrency into the process of social networks, which is, probably the most popular thing on the internet. So, for instance, Facebook, if you were to post a successful post or something interesting, people could reward you with a cryptocurrency, or it could be built into the network. Augmented businesses. So basically, if you're taking your business model and it's an existing business model and you're taking pieces of it and you're adding it to a smart contract or a decentralized platform, you can still function in the real world, but you can take some parts of your business and offload it into a decentralized space as it's advantageous. Decentralized human activity. This would be things like Uber, um, exchanging value, renting things. This has been something that's talked about and hasn't fully been taken advantage of. Now, there's a number of other sectors, but this is generally the ones that have been tapped or at least approached. So, how do these projects launch? So, a lot of them launch as ICOs or crowdsales or a number of other names. So, Ethereum, for instance, was a sale and the initial tokens were sold and people participated. And then, as the network launched, they were able to reap the benefits. And this happens in a lot of cases. This is something the token market is working on so that you can invest in the tokens and then see gains as the network or platform continues. Public mining, this is where a coin is launched in a fair manner, or at least in an open manner, like Zcash, and many different participants start up very close to launch and start mining. Pre-mining is generally when the entity creates the coins already. Now, an ICO could be considered a pre-mine, but if there's going to be mining for the coin, the creator of the coin has already created 10% of the coins and then opens it up to the public. And this could be done with proof of stake as well, where you would, take 10% of the coins and then you would open the proof of stake model open to the public. Participation acquisition, well, this is a small part, but people who tweet, who write articles, who get engaged in various activities as the coin is launching can receive coins. Now, it's generally not the entire sale, but they will support the media push and various things that are happening with the coin by offering that participation or the people who participate rewards. Now, here's some things to evaluate in a project. Evaluating the team is key. You can look at LinkedIn, you can look at past projects, and basically if you can see that they've had a string of successes, that's a big, big thing. That gives you some inclination as to their ability to deliver on what they're promising. So you want to look for success. They may not have worked at the biggest company or this or that, but they've been successful and they've launched businesses or projects before. Now, marketing isn't everything for a project, but it's important how they present the project, how well it's known, if they have articles, how well they work with their community. Ideally, in marketing language, even on the website, it should be fair and realistic. So you don't want to see they're reinventing the universe, but you want to see that this is a solid project and it's great, and hear it in a way that is fair to the consumer. Now, trade is a little bit tricky. Some coins you might buy, or tokens, and the trade cycle is very quick. It gets on the market, there's a period where you can reap the rewards, you can take some gains, and then the project sort of, goes into a pullback and a long-term sideways movement. However, if the project is showing good traction and you think that the updates and the announcements speak to its strengths, it's possible that it's a good long-term hold. Now, with Ethereum, it took quite a long time for the market to react. However, patience did pay off, and a lot of people saw the benefits. Obviously, recently, the price has gone down a little bit, but if you look at the cycle and the ICO price, it was quite good returns for those people that were patient. Now, some projects have a for-profit and a non-profit entity. This is not that common, but in the case of Factom, for instance, there is the Factoid or Factom coin and decentralized network, which is powered by the token. However, they also have a for-profit entity that allows them to develop on top of the platform for various business needs. So if a business contacts them and wants to build something, they build it on top of Factom, and they're able to make profit as a team while still supporting the decentralized network. So this is becoming more common, and you might see this where even in Ethereum now, there's the nonprofit developer entities, and then there's the for-profit companies so that they can really get paid for the work that they put in. It's often difficult sometimes as consistent developers to get paid with open source projects, so they tend to drift to for-profit entities. So here's the major things for evaluating sales. Do they have a code base? So do they have code on GitHub? Can they show that they have the chops to create it? Do they have previous experience, like I talked earlier? Have they created projects that were successful? Is there a market? So is there a lot of competition with what they're doing? Do we see demand? Are there existing centralized models that are very popular in this space? Is there a clear focus? So does the company present what they want to do in a clear way? They say, we want to create XYZ, and that is what we want to create, and it's well defined. Or is it described in a way that's difficult to understand, spread out, and seems like there might not be that much organization? Do they have an existing community? So are there already people keeping track of the coin, following Twitter, participating in the Slack? This really contributes to the buzz and the potential success, because if they can have a successful community before launch and they can show that they have some traction, that means that there are already people that are vested in the success of the coin. Do they have a preview? Do they give you some type of working thing that you can see, a demo, a video of it, screenshots, a very clear vision of what they're creating? That is very beneficial because often their descriptions can be difficult to understand, but when you see the product and you can hold it, just like you would go into a store to buy a computer, when you could see and hold the thing, you really can understand what's going on. Do they have a solid launch date? So many sales, many types of ICOs or things like this, they don't exactly say when they're going to launch. So basically they'll say, okay, this is the sale, but we're going to launch sometime in the next 2 years, or we're going to launch, sometime in the next year. Now, it's difficult for developers to give you an exact time, but it's good to have a solid launch date because it gives you sort of an expectation as to when you might see a good return on your initial purchase. Will coins be available quickly? In some projects, basically, they're able to give you the coins right away. It's an Ethereum app token. It's an app token on Omni or Counterparty. And basically, you can start trading it right away before the thing is finished. Or they already have the project far enough along that you can simply engage in the functionality of the project right away. And do they have fair allocation of funds? Well, basically, often they'll publish a budget, a basic budget for the sale. They'll say 5% to development, 5% to early investors, and 90% to the rest. Now, you want to see that the tokens are evenly distributed in a way that's fair, ideally. Now, none of these rules here are hard set, but you'd like to have, a majority of them. So you want to see that how they've structured their sale is fair, and the allocation is fair, so that when it hits the market, there isn't a huge amount of coins held by the project and a vested interest to basically sell. So what about Bitcoin? Bitcoin is often overlooked as a smart contract platform, or having smart contract features, or being able to do things. So it has multi-sig functionality. It has something called check sequence verify, check lock time verify, P2SH, which is used for multi-sig, embedded scripting, so there's some scripting language you can do. And upcoming, there's Lightning Network, which is a very quick way to do micropayments and payment channels to allow off-chain / on-chain scaling. Sidechains, which allows you to put things next to Bitcoin that are still convertible, but can have their own defined blockchain. For instance, Rootstock. Rootstock is a sidechain which is basically Ethereum connected to Bitcoin. Now, Bitcoin has rigid consensus, so it's really hard to update. It's hard to innovate in some ways. Now, that's one of its best things because it's a payment network and we want it to stay stable. But in terms of other projects, app coins, and things that are coming out, they're able to create things without these boundaries. They can start the project and they can do a lot of things because Bitcoin would basically take a year and a hard fork and various other things in order to add new functionality. Bitcoin currently has full blocks, so the scaling isn't perfect, and this is one of the biggest debates. So there's room for networks that can handle large scale. Slow confirmation. It's possible to increase the speed, decrease the speed time that it takes to confirm. So for instance, in Bitcoin, it's about 10 minutes per confirmation. Many things, require 3 confirmations. The fees are getting a little higher. Well, in Litecoin and some other coins, they're able to drop that 10 minutes down to, say, 5 minutes. Or in Ethereum's case, they're able to drop it to like 14 seconds. So Bitcoin has that. It also lacks fungibility. Now, this is privacy. You can't really do private transactions in Bitcoin yet. It's possible in the future. And this is what's created this sort of privacy coin sector. A lot of the sectors that exist are basically things that Bitcoin doesn't do yet, and it may do in the future. So Bitcoin is definitely the big dog, but it has trouble innovating and going to the next step, and also requires some professionalism even to do, say, app tokens or things on the blockchain. Now, this is something Token Market is working on. And basically, if you're going to create an app coin for a business, you need to have professionalism, need to know who the team is, you need to have something backing the value or creating the value. And that can't necessarily be done just by technology. That's something that requires a lot of work outside of that. So what we do with our clients is we help them spend time to understand their monetization model and help them understand how they can create a token that has fair value and is related to a functionality or a business that has demand. So I appreciate your time. I hope this video was helpful. Just wanted to go through the basics. Feel free to email me, gavin@tokenmarket.net, or you can email info@tokenmarket.net. As I said, we provide a number of services and have a lot of information and resources on our site. So if you haven't visited tokenmarket.net yet, please visit.